Oil ministers today say they're okay with current global prices. Their focus at the Vienna meeting today is on getting members to keep to their quotas. Prices remain at about double where they were last December, but demand remains weak and inventories remain high. Phil Flynn of PFG Best Research, contributor to Fox Business Channel, is here to talk oil. He's at the CBOT. Phil, thanks for being here.
Hey, thanks for having me, Susan.
You've been talking a lot about oil being driven by gold. Tell us about that, because we're hearing mostly about OPEC in the headlines today.
Yeah, you know what, I'll tell you what, OPEC is so yesterday's news. Do they really matter anymore? I mean, why even go to Vienna, for heaven's sakes? I mean, all you're going to do is, slap yourself high five, in a slowing global economy. We got $70 oil. Life is good if you're an OPEC guy. But yesterday, of course, really, I mean, the oil market, they're paying more attention to what gold is doing. And the reason why gold has gone high is the weakness in the dollar. Those are two factors that really seem to grab the attention of oil traders yesterday. And why is that? I think if you look at the price of gold, you look at the value of the dollar, it really tells you a lot about where we are in this economic recovery. Our fears for the future, our hopes for the future, and concerns about inflation. And when you got the world, everybody pounding on the dollar saying, we need a new reserve currency, and you get that appetite for risk, you see gold start to take off, and then oil, is going to join that party.
Well, after this big move for gold and now for oil, we saw what happened yesterday. Is that going to continue?
Oil's going to have a hard time continuing the rally because it really went up reluctantly. Over the past few months, the oil was following the stock market, it was following the dollar, almost tick for tick. But if you look at the last few weeks, oil hasn't wanted to go up as much as it has in the past. And part of that is because we're heading to the weakest demand period of the year. Supplies are above average everywhere you look, and so it's getting harder and harder for oil to continue to drive higher, even with the weakness in the dollar, and even with some of the other stories that have been driving oil. But I'll tell you this, yesterday oil did seem to get some new life because we saw those incredible jump in car sales in China yesterday. I mean, China car sales, talk about cash for clunkers, up 90% from a year ago. Yeah. So oil traders are saying, hey, wait a second, if these guys are buying cars like that, that could mean strong oil demand in the future, and that gave us some demand hopes. But you know what, this time of year, it's going to be tough for oil to maintain this momentum, with all the negative, demand numbers that we've been hearing.
Okay, so OPEC is pretty much a non-event, these meetings in Vienna. So do you also agree that their big effort now is to increase compliance, to be more disciplined with its members, to hold to their output levels? Could that have any impact on supporting prices?
I think it is. I mean, if we can see evidence that they're going to do it. But let's face it, the OPEC cartel, at the last meeting, I think their compliance was somewhere around 80%. It slipped to 70%. Hey, that's a passing grade for these guys because that's about the best compliance they've ever had. And it is going to be more difficult for OPEC to comply to production cuts because, number one, they need the revenue desperately, these countries that are cheating on their quotas. And number two, if the members are saying, well, hey, wait a second, if we don't sell this oil and make these profits, there's going to be other countries that are going to step in and take our market share. And that's why we're seeing more concern with OPEC with some of the non-OPEC producers, mainly Russia, which has actually been increasing production, not cutting back, and cutting into their market share. So I think we're getting back into the old conflicts that we've always seen in the OPEC cartel, and I think we're going to see compliance be more and more difficult for these members as we move forward.
Well, that can't hurt prices. Also, we have driving season winding down, but winter season approaching. A lot of predictions are talking about higher prices next year. Where do you see demand and prices going for 2010?
2010, in my opinion, I think we are going to see higher prices, but I think before we get to higher prices, we need to see lower prices first. Because, there's so much of the rally in oil has really been pumped up by the world central banks, by all of the stimulus we've seen put in the system. But if we're going to get sustainable high energy prices, we're going to see it have to be backed up by demand. You just can't keep pumping up the price of oil forever. You can't just keep printing money forever. So at some point, I think oil's going to have to stand on its own merits. And, to get to that point, to build that kind of demand base, I think we need to see prices actually come down, before they can move solidly higher.
Okay, before I let you go, Phil, I want to ask you a quick question about natural gas, because we have Jim Cramer on CNBC all week long this week touting gas as the ultimate bridge fuel. Do you agree, and where do you see those prices going, and can Cramer make a difference?
Well, I don't know if Cramer can make a difference, but he's probably right on this one, to be honest with you, because let's face it, I mean, the new production techniques that we've seen in natural gas has made it a more viable fuel. I mean, a few years ago, it wasn't a viable fuel because, we couldn't produce enough gas in this country to meet our own needs. But with new drilling technologies, shale gas, directional drilling, we've changed the natural gas market. For the first time in history, proven natural gas reserves actually went up from the year before. So, call it the stop clock theory, but Cramer's right on this one.
Okay. All right, Phil Flynn from PFG Best Research, thanks so much for joining us.
Thank you.
Always a pleasure.